Welcome to another episode of Millennial Investing Explained. Here's today's question. What is the best process for purchasing a stock in an individual company? Should an investor buy the entire position right away? Or maybe should they take it slower and buy a few shares at a time and scale up their position through a strategy like dollar cost averaging?
I mean, there are a couple different ways to look at that. I think my daughters, for example, we got them started when they were young. And the idea with them is that every time they buy a stock, then they can't buy that stock again. That means they have to buy a different one. And the idea is there just to teach that notion of diversification and how it can help. And just getting that point hammered home early on. So I think from that perspective, they're just going to buy in once. But there are times that we teach our members where if you're either unsure or you feel like there's a stock where the price is really kind of out of control, or it's just a little bit of a volatile holding, or it's a stock where you want to build a bigger position over time anyway, people can buy in thirds, which is just buying, in 3 different stages along the way. That can help you ease into a position. And we always have taught making sure just to keep your transaction costs at 2% or lower. But now, virtually everybody, especially I'm sure you saw that Schwab news where they just cut their transaction fees completely. And so, we're basically, the race to zero has come to an end. I think transaction fees are no longer an issue. So you can really buy into a position as much as you want without having to worry about those transaction costs.
When transaction fees were higher, you had to buy bigger positions to make it worth it when you're paying that commission. But today, as we record this episode, Charles Schwab went to zero trade commissions, and I expect others to follow. And of course, there was already Robinhood. So now maybe investors don't need to do that.
Listen, I remember back in the day when I was paying $50 commissions. So, think about that. And I'm not that old. Just now we've hit zero, and that's pretty cool. Most places are just going to start going to zero because that's what the competitive direction is determined.
Yeah, and that definitely helps investors make more frequent, smaller investments.
Now the big challenge, I guess, is you got so many of these really good businesses out there with these stock prices in the thousands of dollars. And, some people, just because they can't afford perhaps one entire share, that would prevent them from getting in. Obviously, they're fractional shares that you can buy on certain platforms. But that's been a great, I think, addition to it. Gives investors more choice.
That's all for this episode of Millennial Investing Explained. Be sure to follow me on Instagram, Twitter, and Facebook, or subscribe to our YouTube channel to get even more free content.